So today I'm talking about my study paper, that is adoption of digital finance among youth, a study. So financial incorporation is an essential component for an individual to sustain in this growing world. And the youth population within the world cannot be ignored and has to be made a base for policy making. Around 1.2 billion population in the world are of the age of 15 to 24 years. So in major regions of world, the youth population counts for 25% of the population. And financial inclusion supports inclusive development. It is a key enabler for many of the sustainable development goals, the SDGs, and it is also at the heart of the G20's agenda. Notwithstanding progress made to the date in advancing financial inclusion, almost half of world's young adults, that is 15 to 24 years age group, are financially excluded as per the OECD data as on 2020, that is pre-COVID. Now, this I have taken from OECD that says that in formal institution, financial institution, how many, what proportion of youth have the account in formal this financial institution in the age group of 15 to 24. So across, mostly it is centered around MENA region. So it can be seen in among all the regions also, it can be seen that male participants in the 15 to 24 years, they have a higher proportion of account holding vis-a-vis female participants. So gender also plays a role, not only age, but gender also plays a role in financial exclusion of the population. Now, personal financial situation and employment status. So countries indicated that the personal financial situation of many young people, including youth, unemployment, and lack of money as factors influencing their financial inclusion or lack of it. Youth unemployment rates remain high in much of the world as ILO 2020. Globally, the percentage of unemployed youth 13.1% in 2018 from 2008 data of 12.3%, around 1% increase, and with the MENA region seeing the highest overall increase. In Lebanon, for example, high youth unemployment is cited as the main barrier to youth financial inclusion, and this I am quoting from the ILO report. While in Mexico, unemployment is the main reported reason for not having a retirement savings account. And in Nigeria, according to a study, lack of income is cited as one of the major reasons for financial exclusion affecting the youth. Now, digitization and access to digital financial services may offer ways to overcome some of the challenges that impede youth from accessing and using financial services, such as physical infrastructure barriers or high cost, by offering convenient, faster, secure, and timely transaction and adapting to specific needs through customization. Digital financial services, when provided in a responsible way within a robust infrastructure, may contribute to increased resilience of the financial sector and of individual in times of crisis. So within the current environment, as governments around the world respond to health, social, and economic effects of COVID-19 pandemic, the opportunities provided by digital means for individuals and businesses to continue accessing and using financial products and services are important and relevant. So with the data that includes gender, age, and economic and social background of the individuals, various policies are taken care of by nations all around the world. So further, these policies include training and education, starting earning, starting a family, etc., where every young individual comes up to a situation where he needs to take financial decision that becomes the base for their future. So these decisions look for financial services and products that act as a base for transition within their lives and a secure future. Right? So fintech, when we are talking about technology adoption, so fintech offers a curious, you can say curious case where digitization of the financial services offers a great deal of, we can say, opportunities, plethora of opportunity for future. And I can quote the experience of my country, that is India, which now ranks number 1 in terms of digital transactions, number of digital transactions per year. So the way the country is transformed through this fintech revolution is absolutely astounding. When in a span of 3-4 years, we became, especially the impetus was COVID-19 pandemic, when from a largely non-digital financial sector, the number one in the world in terms of number of transactions done in a short span of 3 to 4 years, right? So fintech offers a great deal of hope as far as technology is concerned, and the this paper considers opportunities for bringing youth into formal financial sector in an appropriate and age-sensitive way through digital innovation and technology, taking into account broader contextual factors affecting financial inclusion, since digitization is not experienced in isolation. Now, at the same time, it is equally important to acknowledge the potential risk of technological innovations, especially when considering their impact on young people. The paper therefore recognizes that access to digital financial services must be supported by digital and financial education provided in an appropriate financial consumer protection framework in the context of broader child protection policies. Because 15 to 24 age group, as we are talking about in most of the national geographies, below 18, they are considered not adults, right? So they're adolescents. So in that context, it is because if any frauds or crimes happen, that will be under child law, especially in geography like India. So they are not considered adults. So financial frauds or anything happens, so that has to be taken care of. Now, digital tools and techniques are very helpful in the transformation within the range of financial products and services. This further helps in uplifting economic and financial conditions of a nation as well. It holds the capability of converting individuals into more consistent and responsible individuals. So digital exposure becomes essential for every individual in today's growing financial and economic activities. So I'm skipping this literature review part. Now, when it comes to global penetration of internet and digital technology, development within a nation is supported by financial services and its penetration within its markets. So such products and services target youth who are between age of 15 to 24 years. Many countries have different parameters for categorizing an individual as an adult or a youth, as I was talking. And variation within this category create loopholes within the data that become problematic with creating a report. Now, youth is interacting with digital technology from a young age, right? And most of the young generations haven't noticed their childhood without digital technology. The majority of youths haven't witnessed a world without the internet and digital technology. This has highly impacted the way youth interacts and learns about things. So, and this signifies that majority of internet and digital platform users are young and unaware of financial products and services and need to understand their implications, right? So at the one hand, they are digital natives, as the term says. They are digital natives. They are born with technology. They have seen a world where there is internet, but at the same time, since absence of fintech, they don't know how this technology can be leveraged to get financial inclusion, right? And so that is a very big opportunity worldwide to bridge the bridge the financial divide. There is digital divide is not there. So youth are mostly on internet, on technology. But what is the problem? Problem is the financial divide. So youth are mostly out of the ambit of formal financial system. And that leads to what? That leads to inequality, right? And as we have seen, that gender also plays a very important role in financial exclusion. So one is age, second is gender. So these factors create gender discrimination on digital platform in various countries. So it can be noticed that in India, around 30% of internet users are female. The facilities for young individuals towards their access to affordable internet and mobile phones have ensured their education within the financial space. Now, so this I'm leaving. So reason for financial literacy among illiteracy among youth. So I'll just run through this. So lower financial literacy. So financial literacy among the youth is power that every country needs to achieve. And financial literate youth can grow the country at its highest pace. Financial inclusion of youth is highly affected because of the low level of financial literacy. And that also depends on the culture of the country, whether the youth are in decision making, this decision making part in their individual families or not, right? Whether the in which region the country is. The financial exclusion of individual within a country is harmful to the country as its growth gets highly affected. Gallup 2019 said. So rate improvement in credit scores and individuals seeking debts for productive purposes are some of the ways we can include youth into the formal financial system. Youth is not only financially exclusive but also lacks awareness regarding the financial products and services along with their skills of it. So, and personal employment and financial status, as we discussed, because fintech. So one interesting part is technology, where it is a great enabler. So financially excluded people, they can be brought to formal financial system through technology, through fintech. But that technology is causing youth to get not gainful employment. Many of the mundane jobs, they are getting AI driven, right? So that is a problem. So, so I'll come to the conclusion. So support an inclusive and evidence-based approach to advancing youth digital finance. So integrate youth voices in policy making and program design related to youth digital financial inclusion wherever possible. Consider the collection and use of anonymized youth-specific financial inclusion data, and consider economic, social, cultural, gender, and religious factors that may affect availability and accessibility of financial product for youths. So with this, I think there is paucity of time, not much time is there. So with these words, I finish my presentation. Thank you. Thank you, sir.